Hey everyone, and thanks for joining us today for this Share to Buy Live webinar. This is the first of a new series that we're going to be doing, aiming at making sure that our audience of first-time buyers and affordable home ownership seekers get the latest information on any changes in the market, any mortgage market updates, any changes to policy, just making sure that you're kept in the loop as things have a tendency to change pretty rapidly in the property market. We are joined today by an expert panel of people who've been involved in the property sector for, I won't say how long, but for a few years, we'll put it that way. And between them have literally helped thousands of people onto the property ladder over the years. So first up, we have Danny Edwesi from Home at Last. We have Joel Taylor from Owen, Paulo Solicitors, and we have Anthony Hall from Censeo Financial. When we were deciding what this first session might be about, there seemed to be a bit of an obvious choice, which was, as I'm sure everybody is aware, there was a change of government last month. And so we thought it would be a great opportunity to just review what has been announced so far by the new Labour government in respects to housing and home ownership, and discuss how that might impact yourselves as first-time buyers or home seekers. There's also been a little bit of a change around affordability for shared ownership recently, and Anthony's going to give us a bit of an update on that side of things. And just a reminder to everybody that at the end of the session, we will be doing a Q&A. So on the right-hand side of your screen, you should hopefully be able to see a chat window. Please feel free to add your questions into that window throughout the session, and we'll address as many of them as possible when we get to the end of the presentation aspect of the session. So what we're trying to do today is not necessarily kind of go into a big political discussion about the rights and wrongs of the policies, or whether we think these policies might actually come to fruition or not. What we want to do is just try and address the facts, address what we know so far, and give you an overview of what's been actually said by Labour so far. So just one more thing, just to let you know, this session is being recorded. So if you have to drop out, I know it's probably lots of people's lunch breaks, you have to drop out. If you can't watch the whole thing, then we will be making it available on the Share to Buy website and on our social channels as well. So that is it from me. I'm going to come back at the end of the session and put your questions to this set of experts. But for now, I will hand over to, I'll just get my presentation ready. Sorry, I've got about 1 million pages. I wasn't anticipating that it would do that to me. Bear with. Almost there, Danny, I promise. Here we go. Right, over to you, Danny. Thank you.
Thank you so much, and so excited to be here. Hope everybody is enjoying the day today. So I am Danny Edwesi. I'm the founder of Home at Last, and we are a property consultancy dedicated to helping hopeful first-time buyers like yourselves to get on the property ladder. As you know, most people kind of feel home ownership can feel very, very daunting, and for some can feel kind of impossible when you look at what other people are kind of putting into their deposit. And so we are really here to help. We give people kind of tailored information for their search, helping them realize, you know, what's the best way to get onto the ladder, and guiding them through every step of making that step onto the ladder. Working with us means that you kind of have the opportunity to learn from other people's mistakes, and to kind of have somebody in your corner, where estate agents do work for sellers. So we work with two groups of people. The kind of first group of people are the people that are saving for their first home, that are trying to figure out kind of, you know, how does the whole process work? What do they need? How much money do they need? What professionals do they need? What schemes should they be considering? And then people that are ready to buy, and we will help them find properties, go to viewings, navigate the whole negotiation, and kind of getting the property for the best price possible, and just offering that kind of end-to-end support. So that is what we do here at home at last. So today I'm really going to want to cover the kind of key policies that Labour has mentioned. Will be relating to affordable housing, what they are, as I said, in terms of kind of mortgage support, and also leasehold reform, and really excited to kind of get you some kind of top level information before everyone else kind of goes into a bit more detail in terms of kind of leaseholds and how mortgages, what we can kind of consider in terms of mortgages going forward. So kind of the key policy changes we are hoping for is a real big increased supply in terms of affordable housing. Labour's made some really kind of bold statements in terms of the number of houses that they're hoping to build, and specifically the number of properties that they're hoping will be affordable. They are kind of strengthening planning obligations in terms of where we are kind of seeing lacks of criteria in terms of what properties can be converted, especially to encourage developers to kind of to build more affordable homes, and they really want to increase the availability of homes specifically for first-time buyers. As you can imagine, first-time buyers underpin the market, and so the property market, and so getting as many first-time buyers on the ladder as possible works out great for everybody. We've seen some policies in terms of, mortgage support, an introduction of a permanent mortgage guarantee scheme. It's quite similar to kind of the guarantee scheme, that exists, but with some great changes that will, hopefully reduce costs and help first-time buyers that are struggling with deposits. In essence, it does mean that kind of lenders are encouraged to kind of lend at a higher loan to value, so where you may have a smaller deposit, you still are able to make that step onto the property ladder. There's been some kind of changes in terms of rental reform. So an introduction of kind of caps to prevent unaffordable price hikes, upfront payments, kind of really trying to clamp down on bidding wars, which can really drive the price of rents up. And just having that security, we've already kind of seen that kind of policies around kind of no fault evictions and just reducing that risk, so that when you buy it, when you are in a home, whether that's renting or buying, you have that security. So giving people who aren't yet able to kind of afford to get onto the property ladder at least security in terms of the homes that they are renting. And then there's also some changes in terms of leasehold reform, so really having a real kind of abolishing of the leasehold system. Increased regulation around charges that exist, especially around kind of estate management charges for kind of new build homes, and banning ground rents for new leasehold properties. So lots of really exciting policies that we should hopefully see over the next few years, and a bit more detail come out as the years, as the months go on. So I'll kind of address social and affordable housing first. What I think is really key is kind of making sure that there's modifications in terms of the affordable homes program. There's kind of planning reforms, as I mentioned, in terms of giving people more options to convert buildings into affordable homes, and then what's kind of great to see, which we've not seen before, is kind of the options of kind of building on kind of brown and greenbelt land that's been previously protected. So yeah, in terms of affordable homes, the government plans to deliver the biggest increase in social and affordable house building this generation. We're looking at around kind of 1.5 million homes by the end of Labour's current term, which is fantastic. And in order to achieve this, there'll be significant changes made to kind of reduce the bottlenecks for kind of affecting this, which have previously been, around kind of the laws around what buildings can be converted and what land can be used. So, for those who don't know, the Affordable Housing Programme is a government programme, and it allocates grant funding to housing associations and local authorities. And this really helps develop kind of affordable housing, such as shared ownership. And the current programme, which runs to around 2026, has a budget of 11.5 billion. And with that, we aim to see a kind of like 180,000 new homes. So that's really hopefully great news for everybody on this call. Angelina has also asked for an emergency fund to kind of increase that grant, and be able to kind of increase the target homes that are kind of being built. In terms of planning reforms, as I mentioned, we want local planning authorities to have more powers so that we can kind of meet these new housing targets with a real total of 370,000 new homes a year. They're going to kind of recruit additional planning officers to support this process, and restore and enhance kind of local housing targets to really involve the community, in the process of setting these targets. In terms of brownfield and urban regeneration, there's also plans set out to kind of build on greenbelt land. Of course, we want councils to prioritise brownfield sites, and that's been the history and that's been the trajectory. And then next will be kind of poor quality areas in the green belt, which are going to now be dubbed kind of grey belt land. So this kind of will really increase the amount of land that's available to build affordable homes for everybody. And so the government really is hoping that these reforms will kind of unlock more sites for development, and we'll really see the enablement of effective land assembly, and the kind of potential to really meet the high targets that have been set. In terms of the mortgage guarantee scheme, it's a government initiative for anybody who doesn't know what that is. It's a government initiative designed to really help people access mortgages with lower deposits. It's specifically aimed at first-time buyers or existing homeowners who can afford the monthly mortgage payments but struggle to save that large deposit. And how it works is that the government will cover a portion of the risk to the lender, and then that allows you to secure a mortgage with as little as a 5% deposit, and that will in turn make home ownership much more affordable and just support the housing market by increasing demand for homes. And this is really to kind of encourage lenders to offer those kind of high loan to value mortgages. And the government said, that they're really kind of hoping to work with lenders and the property industry to increase the uptake of the scheme and ensure that they can confidently offer it to prospective buyers. For those of you that have been, seeing how soon you can get onto the property ladder and, aiming for that 10%, the ability of having to only put in a 5% deposit will be kind of huge in terms of reducing the time scale of you making your first step onto the ladder. And so that kind of the last thing that we kind of will cover, and I'll hand over to Joel Taylor for this, will be about the leasehold reform. So there's been major changes announced about leaseholds and service charges. So Joel Taylor from Owen, Paulo will discuss kind of the difference between freehold and leasehold. He'll also be able to discuss the Leasehold Reform Act and what's been changed in terms of that, and just future plans to leasehold reform. So I will now hand over to Joel for the next section.
Hi guys. Thanks, Danny, for the introduction and for your presentation prior. So my name is Joel Taylor. I'm Head of Business Development and Marketing for Owen Paulo Legal. Our details are all there. So we're a conveyancing law firm whose sole focus is resales, shared ownership and staircasing. So that is what we specialise in. We are the only only conveyancing firm in England that focus on that. And we work with many housing associations, financial advisors, local authorities up and down the country. And most of our conveyancers that work with us have been in the sector for over 20 years. So they're quite knowledgeable when it comes to affordable housing. Briefly, very quickly, what we do. So we act for buyers and or sellers for resales, shared ownership. We do staircasing, transfers of equity, remortgages, lease extensions, and so on. So very briefly, I will go over sort of the differences between freehold and leasehold. So for freehold, you would own the property and the land indefinitely. There's no lease on the property, so it is yours for the foreseeable until you decide that you no longer want to own it. It is the most common form of ownership currently in the UK, although this could change at any point. We never know. It is more expensive than its leasehold counterpart, but with that expense comes more responsibility, but also more freedom. So you do have to maintain the land. That does include the garden. You are responsible for the upkeep. But then if you suddenly decide that you want a pet or you want to knock down that wall, then you can. You don't really need to ask a management company or a housing association or a freeholder's permission to do so. It's also easier to remortgage because there is no lease that's tied to the property. Leasehold, on the other hand, you would own for a set period of time, which would be the lifespan of the lease. Usually a lease's lifespan is anywhere from 125 years to 999 years. And then depending on when you purchase that property will depend on how much is left on the lease. If you're purchasing it as a resale, for example, and not a new build, then that property may have 110 years left on the lease or 90 years left on the lease. So it will vary. With a leasehold, the shared spaces are the responsibility of the landlord, and so you do not have any responsibility for the maintenance or upkeep of any communal facilities or communal areas. But then with that comes ground rent and service charges, particularly service charges, because management companies or housing associations won't be able to upkeep any of that for free. And so they will pass that bill on to the leaseholders of the development, who would then share the costs accordingly. And then it's a little bit cheaper than freehold, but with that means that you do have to ask for permission if you want a pet, or you do want to change those 2 smaller bedrooms into 1 larger bedroom. For example, you would then have to contact the freeholder or housing association, local authority, or what have you. You would have to contact them for their permission to do so. Most housing associations, particularly when it comes to pets, are quite relaxed, particularly if it's a dog or a cat, especially nowadays. But if you are very much interested in getting a pet, when you do buy your property, always ask beforehand, just for clarity's sake, more than anything else. So the Leasehold Reform Act is something that's recently come into play. It's not officially been enforced yet, but it was made law by the last government before the general election. So it is expected within the next year, and its design is essentially to make it easier and cheaper for leaseholders and to be involved in the leasehold tenure. Now, one of the main things that they're planning on doing is abolishing the marriage value, which just makes it cheaper to extend the lease. And the rule as it stands right now is once the lease hits 80 years or less, then it becomes more expensive to extend that lease, and buyers and sellers find themselves in a little bit of a catch-22 because a seller will find it hard to find a buyer for their property because the buyer will then find it hard to find a lender who will lend on a property that's got a low lease term, because it can negatively affect the value of the property. So unless the seller is able to find a buyer that is a cash buyer, for example, it can be quite difficult. But then because it becomes more expensive after the term hits 80 years or less, it's then not really affordable for a person to extend the lease. So their plan is to abolish that rule and essentially give it a flat figure to extend the lease. So it does not matter if the lease has 100 years left on it or if the lease has 65 years left on it. It's the same cost. Alongside that, they will be changing the standard lease extension length to 990 years. So as it stands right now, if you extend the lease on a house, it's 50 years. And if you extend the lease on a flat, it's 90 years. But they're going to make it a flat 990. So any leases that are created going forward are automatically on 990 years. But if you are purchasing a property that has an older lease, then that will not be on a 990-year term, and it will only change to a 990-year term at the point of extending it. So if you get a property with an older lease, please don't just assume that it's automatically been upgraded to a 990-year lease, because that's not the case, I'm afraid. They're also planning on giving greater transparency on service charges. This has become a very big thing in the media recently, of service charges creating issues. Essentially now, it's important to remember that service charges are a leasehold issue as opposed to a shared ownership issue. Shared ownership is leasehold and it is part of the leasehold tenure, but service charges aren't one or the other. They're an issue for both. And essentially, if you're not really aware of what's been going on, service charges have sort of come under fire for just lack of transparency more than anything else, for the fact that for a lot of leaseholders, they're finding service charges hiking up quite considerably, quite randomly, or at least for them, quite randomly. And there isn't really a solid reason as to why. It will be different for different management companies or different housing associations as to why they're increasing service charges. But a lot of people feel like the service charges are being increased for no real reason, and they're not really seeing any validation as to why they're being increased. So the aim is to give greater transparency of service charges, so that as a leaseholder you have a bit of an understanding as to why that service charge is being increased, what you're paying for when it comes to service charges, and so on. And their aim is also to make the right to manage become easier. And finally, they're going to be working to create quicker sales by setting maximum times and fees for the home buying and selling information. And then very briefly, I'll go over future plans that the government have discussed, but obviously haven't really set into motion yet, and also common hold, because that started to become more of a common talking point right now. So overall, their aim is to ban the sale of leasehold homes except in exceptional circumstances. So shared ownership will highly likely be one of those exceptional circumstances, and there'll probably be a few other exceptional circumstances as well that they've not really announced. But overall, their aim is to phase out leasehold homes and have freehold and eventually common hold as the main tenures. They're also planning on removing the 2-year requirement on lease extensions and buying the freehold. So as it stands at the moment, most leases will have a rule that essentially forbids anyone from extending the lease or buying the freehold for 2 years after they've purchased a property. And then from that point on, after those 2 years, you're free to extend it or to buy the freehold if you want. But the aim is to remove that 2-year clause to ensure that there's a bit more freedom for the leaseholder, so that they can actually make that decision if they want. Now, not a lot of people are probably going to be staircasing very shortly after buying their first share of the property, or they won't really be looking to buy the freehold very quickly after buying their first share. But if a person does come into something like inheritance or just a large sum of money, then it is nice for the leaseholder to have that option in just taking that leap and being able to buy the freehold at that time, as opposed to having to sit and wait. Their aim is to also address unfair estate maintenance costs as well. And overall, what they're planning to do is, as I've said, phase out leasehold and put more of an emphasis on common hold tenure, or encourage it. Now, common hold, if you haven't really heard of it or know much about it, is seen as a bit of a hybrid of freehold and leasehold. And for example, say if you've got a flat, then you could own the freehold of that flat, but each flat, if you take as a unit, so you would own your unit of that building, and then other people would own their own units. They'd own it indefinitely, but then you would work with the other freeholders and the other owners within that development to manage the communal areas. So there'll be no management company or what have you, and it would be managed by you as the owners, as opposed to, as I've just said, a management company. So it's seen as a bit of a hybrid between freehold and leasehold, in that there's a I've forgotten my word now. Yeah, I'll move on from that because I'm rambling. It's seen as a hybrid of freehold and leasehold, essentially, and that's really all you need to know about it at this early stage. So that's Owen Paulo. I've been Joel. Thank you for listening to my ramblings as we got to the end of that. And like I said, if you want a quote from Owen Paulo for any work, then you can contact us on inquiries at owenpaulo.co.uk. You can get a quote directly from our website. You can call us. I haven't put the number here for some reason, on 0808 196 7020. And finally, Owen Paulo have just come out with a TikTok fairly recently, which is run by myself, which essentially my aim is to create sort of a debunking or sort of a mythbusters for shared ownership from the conveyancing side. And it goes through the process so that leaseholders or potential buyers sort of know what to expect from their conveyancer and what to expect from the process, and feel a bit more comfortable with the process as well. So if you're on TikTok and you're interested in that, then you can give us a follow as well. So that's it for us. I will wrap up, and I will now introduce you to Anthony from Censeo, who will start to talk you through affordability and a bit more about mortgages for you. So thank you very much.
Good afternoon. Thanks for joining. My name is Anthony Hall. I'm one of the directors at Censeo Financial. Thanks for the introduction, Joel. I'm going to talk through a little bit about the mortgage market, what Labour have intended on doing and what they've published. We have had a little bit of information about that already, so that won't be too much, but then I'll also talk about shared ownership affordability as well. So Labour in the mortgage market, where are we at the moment? What's a month on from the election? What we have seen is the Bank of England cut the base rate by 0.25, so 0.25% down to 5%. So that happened last week, which is good news for those with existing mortgages, which has led to mortgage rates actually coming down. So many banks and building societies, in light of the Bank of England base cut, have actually reduced mortgage rates, which is good. Of course, for those looking at buying, it means cheaper borrowing costs. So that has then seen a bit of an election bounce, as they call it. So there's been more activity in the market. So speaking to agents, housing associations, the property portals, they've seen more people sort of register and inquire, and that's from what they perceive to be increased confidence. Okay, a lot of people were expecting the Bank of England rate to potentially come down, so have been waiting for that to happen before they start their searches and potentially look at mortgages. So we have seen an increase on mortgage searches and mortgage inquiries, approximately 15% up last month. So it means more people are in the market. Now, with more people in the market, what that does mean, though, is potentially people are fearful that house prices could start to increase as people are bidding on properties. Because especially on the open market, with a lack of supply, but that hasn't been the prediction so far. A lot of the forecasters are saying that house prices will rise modestly this year and in 2025, so that they won't go down. There isn't an expected crash or anything like that, but there will be modest increases. So if you are interested in looking with rates coming down, it's probably a good time to start speaking to an advisor and getting your affordability assessed. The construction industry, one of the things that was mentioned is that Labour plan to build 1.5 million homes over the next 5 years. Now, activity amongst construction last month was at its highest level since 2022. So we have almost seen, and that may not be nothing to do with the election, to be fair, but that's where the stats are. So it's good news in terms of hitting that target and actually getting building reform and changes done with planning. It does look like the construction industry is on the right foot. A lot of the builders have reacted positively to the changes that Labour are essentially discussing about bringing in. The buy-to-let market, which I know no one on this webinar should be interested in buy-to-let. However, it does have an impact on first-time buyers. So the buy-to-let purchases are at its lowest in the last 8 years. So what that basically means is with less buy-to-let investors going for properties, it means that there's more stock in the market, which gives more choice and options for those who are wanting to get onto the ladder. So it is a good thing that there are less buy-to-let investors in the market. So that's some good news. Now, the freedom to buy scheme, also the mortgage guarantee scheme, is there to help with smaller deposits. That's the only real product that Labour have actually mentioned about actually bringing out. And it's a product that's already there, the guarantee scheme. However, it will be permanent is what they're saying, whereas under the Conservative government, it was actually due to end. It was extended once. Labour have said that they will now make this scheme permanent. There are a few things that I just wanted to touch on there, however. It is a 5% deposit. it does mean that typically the interest rates are going to be a little bit higher than if you've got a 10, 15 or 20% deposit. So affordability is still also a challenge, because you can still only borrow anywhere between 4.5 and 5 times your salary. So although there are benefits to the guarantee scheme, you still have the same criteria when it comes to affordability assessments and what you're able to borrow. So it won't necessarily be the best thing for everyone, but it definitely will help. It has helped some 24,000 people already. So I'll talk a little bit about the buying process when it comes to shared ownership and what that actually looks like. So Censeo Financial, as mortgage advisors, we specialize in the shared ownership space. So I'm going to go through what that actually looks like. Now, we work with Share to Buy, and they have the portal where you can search for properties. Now, the first step when looking at shared ownership is to have an affordability assessment. Now, that check will tell you whether or not you're eligible and if you can actually afford a property and what level of share you can actually afford to buy. Once you've done that check, the provider will then ask you to put down typically a reservation or fill out an expression of interest in a particular unit that you want to buy. Once that happens, you then have what they call a detailed financial assessment. That detailed assessment will mean that you need to speak with a mortgage advisor, typically allocated by the provider, and they will then look at all your bank statements, your pay slips, and all your documentation before doing what they call a sign-off to say that you could proceed. That usually will mean that you have to provide an agreement in principle or obtain the decision in principle at that point as well. So when you get the sign-off, you're allocated that property. At that point, it's yours. Your agreement in principle then moves into a full mortgage application. So you submit an application to the lender, typically done via a mortgage broker who specializes in shared ownership like ourselves. Once your application goes in, it's then with the lender to do a valuation. You then get a mortgage offer issued once all the underwriting has been taken. You then exchange contracts, and then you set a date to move in. If you buy a new build, that it may be that the property isn't ready, so it's not what they call build complete. So it isn't going to be ready to move in for maybe 6 months, 3 months, whatever it may be. The provider will be able to tell you the timescale. If it is a resale property, then it may be that you're part of a chain. Somebody is buying another property and they're selling theirs, so you'll be part of that chain. So the timescales can be slightly longer if you're buying a new build that is build complete. But again, the providers and your conveyancers, your solicitors will be able to provide you updates on the timescales as you go through the process. So we always get asked questions every year at the Share to Buy shows regarding, what documents do I need? What do the lenders want? What sort of information is needed? Now, on this sheet here, on this slide, it's basic information that you're going to need. You need to know who you are and where you live. So proof of ID, your passport, proof of residency, so where you've lived for the last 3 years. Now, if you are a non-UK passport holder, you can still obtain a mortgage. It will mean, potentially a larger deposit, subject to your circumstances. How long you've lived in the UK will have an impact, but that's something that will be assessed when you speak to an advisor. You need to evidence your income. So typically, if you're employed, your last 3 months pay slips. If you're self-employed, you'll need to provide SA 302s and tax overviews, which you get from HMRC. If you get benefits, benefit income can be taken into consideration. Not all benefits, but some. And this is really down to the lenders that are available as well. So different lenders will accept different things. So evidence of any benefits are required. Your deposit, so we need to see evidence of that. Your savings as well will be required. If you're getting a gift, you'll also need to provide evidence of the gifted deposit. Okay. Any commitment, so a copy of your credit report is going to be requested. So you need to provide 3 months bank statements as well to show what your outgoings look like. So essentially, these are the things that you need. It's worth going onto our website. We've got a section called Preparing for a Mortgage. So that will break down all of these documents and what you need to bring with you when you speak to an advisor. So what you can afford, like I said, that's the key thing. So when you speak to a mortgage advisor, as I said, if you're doing shared ownership, it makes sense to speak to a specialist like ourselves because we understand the criteria. We know what lenders will do shared ownership. However, you may be considering what your options are across the board. So although we specialize in shared ownership, we'll be also be able to tell you whether or not buying on the open market is viable for you. There are other schemes such as the mortgage guarantee, first homes, that is available. So it may be that there are other alternatives. So you should always start with speaking to an advisor to assess what your circumstances are. Now, if you're buying shared ownership, or if you're looking at discount market sale, for example, or you want to know if you can buy on the open market. See, we have a methodology where we have a portal where you log in, you fill out your information, provide all your information in terms of your finances or your commitments and whatever they are, your income. Will then take into account the lender's criteria, the lender's affordability stress testing, and the Homes England eligibility. Now, Homes England work alongside the GLA, who look after London. So that's the Greater London Authority, look after London. The GLA, the Homes England, look after outside of London. So I'm going to talk more about Homes England shortly, because I know there are people that are looking at shared ownership outside of London. But essentially, when you do your assessment, you have to pass the eligibility criteria for the GLA or Homes England, a lender's affordability, and the lender's criteria. There are factors that need to be taken into consideration. So your credit score, how many people are applying, your age, whether or not you've got dependents or not, your residency status, like I mentioned earlier, and then your credit commitments will also be factored in. So there's quite a bit that goes in to determine what you can afford and what you can do. Hence, you need to speak to an advisor as soon as possible. So there are some options that you can actually check your affordability. So we have an app for shared ownership. You can get that on the Apple or Android store, and that's for shared ownership. So it gives you a very quick, rough idea as to what is affordable for you if you're buying shared ownership. And like I mentioned in the last slide, our portal has on there, you fill in the portal with your information, and we'll come back to you and tell you what your affordability looks like. And you can speak to one of our assessors who will be able to go through what your affordability level is. So Homes England, the update from them. So in May, Homes England announced that they were making changes to the way how shared ownership affordability is assessed. So in the previous way it was done is we would look at the mortgage, rent and service charge, and that had to be no more than 45% of your monthly income. So to give you an example, if you earned £1,000 a month, the mortgage, rent and service charge couldn't be more than £450. That was what they deemed as affordable for you to buy a share. It has now changed, and that came into effect as of the 1st of August, that Homes England state that the mortgage that you take out cannot be more than 30% of your net income. And when taking into account your outgoings and expenditure with mortgage, rent, service charge, and all essential housing costs and living costs, you have to have a surplus income of typically around 10% remaining. So whereas they had a 45% mortgage, rent and service charge max, it is now changed that you need to have your mortgage payments no more than 30% of your net income, and then your disposable income, so all your outgoings each month, you need to have at least 10% as a minimum typically remaining as disposable income. Now, in most cases, it hasn't impacted so far. It's only been a week that it's come into play, but we haven't seen any drastic changes or any issues with it so far. But it is early days, and there are reviews sort of set in place over the coming months to make sure that it is working okay. I must stress that in London, however, the methodology is still the same. That hasn't changed. However, each provider will have a policy which you'll be able to find on their website or contact them to find out with regards to what their assessment policy is and what they'll accept and what they will not accept. That is part of the Homes England changes. All providers must publish their policies and make you aware as to how you'll be assessed when you apply for a shared ownership property. So finally, just to finish, as I said, at Censeo, as mortgage advisors, we do like to give back. So we are fee-free. So we do charge a fee for our mortgage advice and arranging mortgages. However, those who are working for the NHS, we are fee-free. And we give to charity for every mortgage that we complete to Albert Kennedy and End Youth Homelessness. I look forward to any questions.
Thank you very much. And I'll just invite Danny and Joel and Anthony to come back on the screen, and then we'll get into the audience questions. So lots and lots and lots of information in there, and a few people have already asked about whether this session will be recorded or whether they'll be able to access it after the live session. The answer is yes, you will be able to, and we'll be posting it on Sharetify website. We'll send a link out to you via email, and we'll also be posting it on our social channels as well. So yeah, plenty of opportunities for you to access the session afterwards. So I'm just going to close down the slides. Joel, I think we are having a few issues getting Joel back, but hopefully he'll join us soon. In the meantime, Anthony, as you would probably expect, lots of questions for you as a mortgage broker. But yeah, we'll try and go through some of the questions that are related to the new policies or new announcements first, and then we've got loads of questions which are general questions around buying a property, leasehold, etc. As well. So where shall we start? Well, question for you, Anthony, or probably for both of you really. We've had 3 or 4 questions from people asking about their age and how that's going to affect them as a first-time buyer. That ranges from people who've asked questions that are on their 40s to mid-40s to people who are in their 50s. And the common question that's coming up is if they're, given the stage the stage of life that they are in, are they still able to get a mortgage? Are they still able to buy a property? So Anthony or Danny, do you want to try to take that one first?
Yeah, I don't mind jumping in on a little bit just to say that age is one of those, from a mortgage perspective, speak to an advisor. It doesn't mean because you're of a certain age, you're not going to be able to obtain a mortgage. Obviously, the term of the mortgage, the length of the mortgage will impact the monthly payments. The shorter it is, the more expensive it will be. However, it is still going to be based on your affordability. There are lenders as well who will go up to an end term of up to age 80 or more. So it's worth speaking to an advisor. If you go to your bank directly, they may say they'll only go up to a retirement age and not take into account your retirement income. But by speaking to a broker who has access to multiple lenders, there may be just a lender that will be able to take you up to the term that makes the purchase that you want affordable. So it is really just about getting the advice. There are over 30 lenders that do shared ownership. So if you're looking at shared ownership, don't be put off because of your age. Speak to a mortgage advisor who will be able to assess you.
Danny, anything you would like to add on top of that in terms of people who are a bit concerned about age?
Yeah, I would echo what Anthony said in terms of speaking to somebody. The amount of people that will book in a free consultation with me and then they've thought that it's not possible due to age or just salary or whatever, and they're like, oh, I can do it. And I'm like, yes, you can. And so honestly, I think like whether it's you're concerned about age or concerned in terms of like affordability and kind of like salary requirements, I would just like book in the chat and see, and then at least we can kind of make a plan to take it, the next step. So don't count yourself out.
Thank you very much. And when it comes to the mortgage guarantee scheme, I don't know if it's easy to do a very quick sort of recap on what that actually is. There's a couple of people who didn't quite catch what that meant. And also, is that something that's available now? Is that something that's coming in the pipeline? If it is in the pipeline, has there been any announcement as to when that might actually be available for buyers? Yeah,
so mortgage guarantee scheme is basically the government backing lenders to have a 5% deposit instead of having a 10% deposit. So it's usually aimed at like first-time buyers or people who can afford the repayments but can't get to a 10% deposit. And it's basically so that the government will allow it's basically so that lenders are able to lend a higher amount because they know that the government is backing if that home were unfortunately to go down the route where it needs to be repossessed. If you don't make your mortgage repayments, your home is repossessed, and that is what they're trying to give lenders security, so they know even though they are lending a higher amount, if that home is repossessed, that they're not going to be out of pocket. In terms of, is it around at the minute, 5% deposit mortgages are around currently as we speak, and I think that is a misconception that people often think that everybody needs to have a 10% deposit, and that is not true. So in terms of there are lots of lenders, and Anne's will be able to tell you specifically how many. I'm not a mortgage broker, but I do speak to people a lot of clients I work with are putting down a 5% deposit. So if that is the figure that you've got to, don't feel like you need to get another, save more to get to the 10% mark, because having a 5% deposit is absolutely an option for you, and in my experience they are widely available, but Anthony knows more about which lenders specifically, but it's an absolute option for you, and it's not specific to an affordable scheme. Whether you are doing no matter, you can put on the open market 5% deposit down, so it's absolutely available.
I think it's worth just adding on to that bit, as we said, that it is 5% of the full market value. However, under the guarantee scheme, what Labour have said is that their freedom to buy scheme will have a cap of £600,000. So you'll be restricted in terms of property value. On the open market, there are 5% deposits. There are mortgage lenders that will do that. There's more than enough. It's just that the government are encouraging more lenders to try and to do 5%. So I'll probably repeat myself a lot during these Q&As. Speak to an advisor. We'll be able to tell you what works for you and what doesn't, basically.
Very much. And freedom to buy, is that just the name for the mortgage guarantee scheme?
That's the name for the Labour's new scheme, freedom to buy.
Yeah, for those of us that have been around for long enough in housing and first-time buyers, you often see things get rebranded as old ideas get a little bit of a fresh lick of paint every now and again with a new name.
Indeed.
Particularly when there's a change of government. But I think one interesting point to make is that there hasn't been any mooting about Help to Buy coming back, or the Help to Buy equity loan scheme coming back as of yet. So anybody that's kind of hanging on, waiting for that, at the moment there isn't any sort of indication that is going to be coming back. Right, Joel, we've got you back, thankfully.
Yes, hopefully.
So a question that we have for you, which was, can you explain the difference between common hold and leasehold?
Yeah, so common hold would essentially be that it's the property without the lease, basically. So it's very similar in that respect to freehold, in that you would own the unit. Say it's a block of flats, for example, you would own that flat unit as indefinitely without the lease. But then where it starts to get complicated is the shared spaces, and that you would then share the upkeep and the maintenance costs of those shared spaces alongside the other residents of the flat. But historically, as it stands right now, flats are always leasehold, because there is then the freeholder that owns the building of the property. So you won't get a freehold flat necessarily.
Kind of leads us on
that's basically the difference.
Yeah, which kind of leads us on to our next question, really, which is that if leasehold is being phased out, or if it appears that that's the intention to phase out leasehold over time, does that mean schemes like shared ownership or rent to buy could no longer exist because there is a natural sort of leasehold element within those?
Well, I think it's important to remember that what they have said is that they're phasing out leasehold except in exceptional circumstances. And so although they haven't specifically said what is or isn't an exceptional circumstance at this point in time, I think it's safe to assume that shared ownership, what with it being one of the few affordable housing options currently available, will constitute as one of those exceptional circumstances, because you can't really have shared ownership without leasehold right now.
Okay, so a couple of more general shared ownership questions. I will start with for shared ownership homes in London, but this question could apply to elsewhere as well. Is 25% the minimum share, or can smaller shares than that be purchased?
The minimum share depends on the lease and the funding period. So the program in which that property was built under and how it was funded will determine. So there are in the newer sort of funding, it will be 10% minimum. However, anything typically not built in the last 2 years or so is going to be a minimum of 25 or above.
Danny, this one's for you, I believe, but obviously other guys are welcome to jump in. So, on the open market, if you're purchasing and you only put down, or you only have a 5% deposit to put down, does that in any way negatively impact your chances of buying that property? For example, if somebody came along who was offering exactly the same amount as you, but they had a 10% deposit instead of a 5% deposit, is that 10% deposit person more likely to be offered that property or be successful in purchasing that property?
That is a very good question. So on the open market, when you are putting an offer forward for a property, there are lots of things that the vendor, the seller, is taking into consideration. So I mean, what people want is a person to buy their property that is most likely to be able to go through the property and buy it. And so most likely can fall into a number of brackets. The best thing to be most likely to is to not have anything to sell. So to be a first-time buyer, to be chain free. That means that you're not trying to sell something else and then you'll have the money to then buy this one. So that's always a really big tick box for you. That's something that's a real positive. The other thing, to the point of your question, is about your deposit size. So if somebody does have a larger deposit and you were coming in at the exact same price and you were both in the same position with nothing to sell, it could be that somebody might favor somebody with a larger deposit, because they feel like it is most likely to go through. When you have an agreement in principle, it is like in theory, we will lend you this much amount of money. But the larger your deposit size is, that the safer that feels for the lender. And so when it actually goes through to your mortgage application stage, people feel that people with larger deposits, they feel more confident in them kind of going through the purchase. So I say to say, yes, it could mean that somebody with a bigger deposit could accept their offer over yours, in that case, but it depends on the situation they're in. And being a first-time buyer and having nothing to sell always is a great advantage over somebody who's in a chain.
Yeah, thank you. Yeah, typically somebody selling wants to get rid of it as quick as possible, generally. So yeah, most people probably aren't going to be that fussy, but every now and again you might encounter that. Does that apply at all to share ownership, Anthony and Joel? If somebody has a 5% or a 10% deposit, are they more or less likely to get a property?
No, not. It doesn't have any impact on deposit size. In fact, as part of the Homes England guidance that came out at the beginning of the month, is that they have to have a first come first serve policy. So they must publish exactly how they allocate, and it can't be based on deposit size.
Joel, I might throw this one at you, but feel free to buy it elsewhere if you want.
Sure.
Stamp duty. Has anything been announced regarding stamp duty from Labour? And as far as you're aware, is there any plans to stop it? And also, how does it apply to shared ownership purchases?
So from what I have personally heard, there hasn't really been any changes in the stamp duty. But historically, what has happened with changes in stamp duty is the government has just rolled ahead with a change, and then not really given much notice about that change, as we all saw with the stamp duty holiday during the pandemic. But as it stands, I don't really think there are any changes to stamp duty. Unfortunately, that does also mean the abolishment of stamp duty. I don't think that's going to happen anytime soon, as wonderful as that would be, particularly for first-time buyers. But if you are a first-time buyer, then you do have exemption for stamp duty up to a certain cost. Now, correct me if I'm wrong, Danny or Anthony, just in case, but I'm trying to remember it off the top of my head. I think it's 450,000 inside London and 250,000 outside of London.
Correct. Yeah.
Which is full market value. So if your property outside of London, so you're purchasing somewhere in Kent, for example, then if the property has a full market value of less than 250,000, you're exempt from stamp duty anyway. What I will say, particularly when it comes to staircasing, is if you are purchasing a property as a new build and you get the option to either pay stamp duty on the full market value or pay stamp duty on just the share you're buying, always consider paying for stamp duty on the full market value, because if you want to staircase in the future, it will greatly benefit you. So even if it costs you an extra couple of grand at that time of buying for stamp duty, if that's affordable to you, I would highly recommend considering it, just to save yourself a lot of money in the future.
Sure. So guys, we are actually running out of time. We've got finished. I mean, it's gone on a lot longer than I thought it would actually, but we've got finished dead on 1:30. So just want to address a couple of the sort of questions that we're getting a few times in the chat. If you have a specific finance question about your needs or how much you might be able to afford, Anthony, they can visit the Censeo website. They can use your calculators to get a sense of how much you may be able to afford. Is that correct? Oh, I think we might have lost Anthony, but I can answer that question for him. Did you get that, Anthony?
So what did you say? What did you say, Nick?
Yeah,
I didn't catch you fully.
A few questions from people who've put their specific financial circumstances in the chat and just wondering and want to get some idea of how much they might be able to afford. Are they able to go to the Censeo website, and do you have any tools that they could use? Okay, I'm gonna answer that.
Yeah, they can go on the Censeo website. We've got an FAQ section.
Yeah, cool. Sorry, the connection with Anthony's dying out a little bit, maybe. So we've had loads of questions. Unfortunately, not enough time to address them all. What we will do is we will collect them together. We will share them with with Danny, with Anthony, with Joel, and we'll try and get back to as many people as possible. We'll also be doing future sessions, so a lot of the questions that have been asked is really good fodder for us to address in future sessions as well. To end, we're going to put the links for Danny, Anthony and Joel into the chat, so please feel free to use those. And then we're just going to end today's session with a little plug for an event called the London Home Show that we at Share to Buy host twice a year, which will be taking place at the QE2 Centre in Westminster on the 28th of September. Free to attend. All of these lovely people you can see on the screen will be there, and you'll get a chance to meet these experts in person if you do come along. If that's not enough to sell it to you, then I don't know what would be. So just finally to say thank you everybody who's attended today, all the questions, really appreciate your engagement. We hope you found it useful. Danny, Anthony, Joel, amazing stuff. Thank you very much for all of your information. And from me, that's everything. So thanks everyone. Goodbye.
Thanks.
Bye guys.
Bye.
We're at the London Home Show, which is the country's leading first-time buyer event. It's completely free to attend and takes place twice a year at the QE2 Centre in Westminster. So if you're interested in looking at alternative housing schemes such as shared ownership, London living rent, discount market sale, you can meet housing providers, you can get financial advice, legal advice, and attend tons of educational sessions throughout the day.
We came to the London Home Show to find out a bit more about different options around buying houses, different schemes that exist, and just to see some of the properties that are available on the market.
It's very, very informative. Spoke to loads of experts, which was really good.
There's a lot of stands and they all are willing to help and answer your questions, so that made the process very easy.
I feel very confident now. I feel like now it's doable.
My number one top tip for a first-time buyer would be, when you're sorting out your finances, allow for a budget buffer.
Pay off your credit cards and your loans.
Speak to a financial advisor. Make an email address that is just about finding a flat.
Draw on the experience of those around you to help you.
Take the step and do it.
We are Share to Buy. We're the country's leading and number one property portal dedicated to first-time buyers. We also host the London Home Show, so everything you need on the website comes in person at the London Home Show, and you find everything you need under one roof.
Peabody, obviously one of the longest standing housing associations. I'm showcasing Battersea Power Station, which is New Mansion Square. Legal and general affordable homes. We have the A-Store Apartments in White City. We have Deanston Wharf in Newham.
I'm dealing with Resi Bracknell, which is in Berkshire, 9 Elms in Wandsworth.
With Square Roots. We have 2 live developments at the moment, one in Hendon, which is northwest London, and then we have another in Lewisham.
Guinness Homes, East London, at our flagship development in Leaside Lock. Signal Parks in Kingston upon Thames.
L&Q, Bean Park, which is based in Barking and Dagenham. Regency Heights, which is based in Park Royal.
We're Southern Housing. We sell shared ownership properties, homes through London Living Rent and on the open market as well.
We're in Notting Hill Genesis. We've got Perfume Factory in Ealing, Gadwall Quarter, which is in Hackney.
We're Fabrica, The Hue in Hounslow. Fantastic properties for first-time buyers.
Site sales, our flagships is Makers Yard in Canning Town.
We're at Avery Homes, Paulo Quarter in Slough, which is a great scheme, some great communal areas.
Censeo Financial, specialist mortgage brokers in shared ownership.
Dutton Gregory, a full-service law firm. We've got our new build and our shared ownership teams here today.
Home at Last is a property consultancy. We help you with every single step of your property journey until you get your keys.
Eastlight are a community-led housing association based in Essex.
What I want for attendees to get out of today is that they have all their questions answered.
I hope they come away a bit more armed with knowledge and a bit more confidence to get that next step.
It's such a fun and friendly vibe here at the London Home Show. Everyone's here to kind of help you out because I always think that property isn't one size fits all.
We're at the